Hey everyone, and welcome back to the channel. If you're thinking about buying a new home or remortgaging, you've probably got your ear to the ground about interest rates and the upcoming budget. There's a lot of noise out there, so today we're going to cut through it all and figure out what's really happening in the UK mortgage market. Is now a good time to make a move? Let's dive in. First, let's talk about the good news. Several major lenders are actually cutting their rates right now. HSBC, for example, just dropped some of their rates by as much as 0.22%. And yes, you heard that right. There are still deals available for under 4%. If you compare this to the same time last year, rates are looking much more attractive. This is happening despite all the chatter about what might be announced in the next government budget. Now, about that budget. There are a ton of rumours flying around. Everything from scrapping stamp duty completely and replacing it with an annual property tax, to big changes in the council tax system. It's the kind of speculation that can make anyone feel a bit nervous and might even tempt you to put your moving plans on ice. But here is the crucial advice from the experts. Don't let these rumours derail your plans. Nick Mendes, a broker from John Charcoal, put it perfectly. He said, "For purchasers, do not let budget rumours freeze a move that already makes sense." The key takeaway here is to focus on your own financial situation. If buying or moving is the right decision for you based on your life and your finances today, then that's what matters. His advice is solid. Get an agreement in principle from a lender before you even make an offer on a property. This shows you're a serious buyer and confirms what you can actually afford at today's rates. So, what's driving these rate cuts? It's all about something called swap rates. Think of swap rates as the interest rates that lenders charge each other. They're a reflection of what the market thinks will happen with interest rates in the future. When swap rates go down, lenders have more room to cut the rates they offer to you and me on fixed-rate mortgages. Rachel Springall, a finance expert at Moneyfacts, mentioned that even though another cut to the Bank of England's base rate seems unlikely in the next couple of months, falling swap rates are encouraging lenders to be more competitive. This is great news for us because it means we're seeing some really attractive deals hitting the market, even for people who might have a smaller deposit or less equity in their current home. But it's not all one-way traffic. David Hollingworth from L&C Mortgages describes the current market as bobbling around. Some lenders are slightly increasing their rates, while others are cutting them. The changes are often small, and there isn't one strong, clear trend across the entire market. So, while we might not see dramatic drops across the board, the fact that rates are relatively stable and low is a huge positive. It creates a window of opportunity to lock in a good deal. So, with all this in mind, what are the practical steps you should be taking? Let's break it down for both buyers and those looking to remortgage. If you're looking to buy a new home, the first thing to remember is that the headline interest rate isn't everything. You need to compare the total cost. That means looking at the rate and the lender's fees. A deal with a slightly higher rate but a much lower fee might actually save you money overall. Think about the total cost over the initial fixed period, whether that's 2, 3, or 5 years. Another pro tip: think about your future. Do you think you might move again within the next couple of years? If so, check if the mortgage is portable. Portability means you can take your mortgage deal with you to a new property, which can save you from paying early repayment charges. If you're lucky enough to be getting help with your deposit from family, get your paperwork in order now. You'll need a formal gift letter, identification from the person giving you the money, and proof of where those funds came from. Having this ready will make the application process much smoother. And finally, a really important one. Stress test your budget. Once you have a mortgage offer, calculate what your monthly payments would be if the interest rate was a little higher, say by 1 or 2%. Could you still comfortably afford it? This gives you a safety net for when your fixed deal ends. Also, always keep a separate cash buffer for unexpected moving costs and any repairs the new place might need. Now, what if you're not moving, but your current mortgage deal is coming to an end? The advice is to start looking for a new deal about 6 months before your current one expires. Why so early? Because most lenders will let you reserve a new rate well in advance. And here is the best part. If that lender drops their rates even further before you complete, they'll usually let you switch to the cheaper deal. It's a win-win. When remortgaging, you have two main options. The first is a product transfer, which means staying with your current lender and simply moving to one of their new deals. This is often the easiest route, with less paperwork. The second option is a full remortgage, where you switch to a brand new lender. Don't just assume the easy option is the best. A new lender might offer a significantly better rate that could save you thousands of pounds over the term, making the extra paperwork well worth it. Here's another great tip. Check your loan-to-value, or LTV. That's the size of your mortgage in relation to your property's value. Lenders offer their best rates in specific LTV bands, like 60%, 75%, or 90%. If you're close to dropping into a lower band, it might be worth injecting a small amount of cash to get there. For example, if your LTV is 76%, paying off a small lump sum to get it to 75% could unlock much better interest rates. Just make sure you're not using up your entire emergency fund to do it. And a final crucial reminder for anyone remortgaging: know your dates. Be aware of exactly when your early repayment charge period ends, and know what your lender's standard variable rate, or SVR, is. You do not want to accidentally roll onto the SVR, as it's almost always much more expensive than any fixed deal you could get. Okay, let's get to the exciting part. What are some of the best deals currently on the market? Remember, these can change quickly, but this gives you a great idea of what's out there right now. Lenders are competing fiercely for borrowers who have a good amount of equity or a large deposit. That's the 60 to 75% loan-to-value range. For remortgages at 60% LTV, which means you have 40% equity, Halifax is offering a 2-year fix at just 3.86%. At 75% LTV, HSBC has a 2-year fix at 3.99%. For those who prefer the security of a longer term, Santander has a 5-year fix at 3.95% at 60% LTV, which even includes a free valuation and some cashback. What if you have a smaller deposit? Don't worry, there are still great options. At 90% LTV, which means a 10% deposit, you can find 2-year fixes around 4.25%. For a 5-year fix at this level, rates are available from around 4.34% with lenders like HSBC. And for first-time buyers, or those with the smallest deposits of just 5%, so a 95% LTV mortgage, you can find 5-year fixes for around 4.78%. Considering how high rates were not so long ago, securing a 5-year deal under 5% provides fantastic security and peace of mind. So, to sum it all up, yes, there's a lot of noise about the budget, but the underlying mortgage market is actually looking pretty healthy. Rates are relatively low and stable, and lenders are competing for your business. The best strategy is to ignore the speculation, focus on your own circumstances, do your research, and speak to a mortgage broker. They can help you navigate the market and find the very best deal for your specific situation. I hope this has helped clear things up for you. Buying a home or remortgaging is a huge decision, but with the right information, you can make a choice that you feel confident and happy with. If you found this video useful, please give it a thumbs up and consider subscribing to the channel for more content just like this. And if you have any questions, drop them in the comments below. I'll do my best to answer them. Thanks so much for watching, and I'll see you in the next one.